Perry can roar. Just ask her. We're at 8:42 here, 18 now before 9. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. And we're checking in on what's going on Wall Street this morning. Party time yesterday. I don't know whether we can continue the party today, though. Let's find out from Philip Statler from Statler Financial Services in downtown Sebring, who's with us on the phone. Philip, good morning. How do?
Good morning, Dave. Doing well today. Markets were pretty yesterday. I just don't see a follow through today, though.
That bloom is off the rose, I guess. Setting the table, it was a really good day on Wall Street yesterday. Almost everybody, absolutely everybody, was up over a full percent on the indexes. The Dow is back over 50,000, gained 646 points yesterday. Standard & Poor's up almost 80, up 1.08%. NASDAQ up almost 400, up 1.5+%, which means it's over 26,000. And the Russell 2000 was the percentage gainer of the bunch, up 2.56%. And I'm not even 100% sure why, except for the fact that oil dipped below $100 a barrel for a while yesterday.
Yeah, I'm not sure either, Dave. What made that happen? It's just interesting to see the ups and downs and the volatility. And I think it's just the Iran, the oil. It's a lot of things, I think, that are causing this volatility right now.
I got to believe it. Part of it, too, was we had a couple, 3 days worth of quote-unquote profit-taking days as much as anything, and everybody saw a few bargains and ended up buying in the process. Like you said, it wasn't anything really earth-shakingly big that happened. I mean, we got down to like $99.50 for a while, and that's a psychological barrier at 100 as far as the price of oil goes. And then we ended up the day yesterday with NVIDIA. I was making fun of it yesterday as the only company right now being listed on a stock exchange, qualifies as a full economic event. And they did what they were expected to do. They slayed their estimates. They were up by gobs of money more than anybody expected them to. But then you start talking about guidance, and they're not doing as well as anybody expected off of that beat, are they?
Well, they basically came in and said that we're going to concede basically to China's Hui company in terms of the AI chip market in China. And I think that probably obviously hurt them in their forward-looking guidance. It had to.
I got to believe that was it because, I mean, they slayed all their estimates. They're up by gobs of money. They had good news because President Trump's summit in China ended up opening up the Chinese market to quote-unquote more of their chips. So everything was coming up roses. And then basically Jensen Huang on the guidance said, yeah, we're going to lose China to Huawei, whether we like it or not. So, and that's, I mean, don't really care that much on a political basis as to whether or not they do well in China or not. As a matter of fact, I'd rather they didn't. But that's a big market to just say we're going to write it off, isn't it?
It is. I mean, considering that their year over year revenue was up like 85%, that's a huge number. And of course, because of that, they do see a slight decline in their stock price this morning. Not much, down 0.6%. So, but still, they're still the giant, right? In all the chip companies right now. The question is how long and how fast can they hang on to it all?
I was kind of thinking that basically when I read that statement last night while I was going through stuff before I went to bed, I was thinking China does not want NVIDIA to do badly. I mean, if they slow down on R&D, China's not going to have anything to steal. Am I being nasty and cynical or something?
A little cynical today, aren't you?
Probably accurate, but still not there. The other big event that came out yesterday was the Federal Open Market Committee meetings, and the indication of the minutes from last month's meeting is that the chance of a rate hike, according to the Chicago Mercantile Exchange's FedWatch tool, the chance of a rate increase got to emphasize that first syllable, is going up again. And that shouldn't surprise much of us at all because, well, the inflation reports we got last week were first-class El Stinko. That can't help the market this morning either, I'd wager.
No, I don't think so either. I mean, but you and I would look at that and say, yeah, it does make sense, right? We continue to see inflation not under control, and gas prices, obviously, oil prices aren't helping that any. But that's really the one of the only tools that the Fed has to really try to bring that inflation number down.
Pretty much. Yeah. The rest of the news this morning, we do have a government data dump for us this morning of stuff that might impact stuff, and it really isn't altogether bad news. Retail sales year over year pacing 2.9% up, got a 0.1% increase last month. I didn't hear whether or not that met expectations or not. Did you?
I don't know. That's not even on my cheat sheet today.
I had that come out on my report. Housing starts 1.47 million. That is down 2.8% from last month, so that's not necessarily good news. But building permits surged by 5.8%. And since we look at guidance so doggone much, permits indicate the future. That might happen anyway. I consider that relatively good news, don't you?
It is, and let's don't poo-poo housing starts too bad because it was better than expected. The expectation was 1.42 million, and so the 1.47 is definitely upwards better than what they expected. Building permits, so you're right, is better than expected and better than what it was last month. So good news there.
An increase is an increase. The usual Thursday morning report from the labor people, first-time unemployment claims staying relatively steady, 209,000 first-time claims, which still comes into the inordinately low numbers. So the hanging on to a job and not shedding any jobs economy on balance seems to be holding steady. 209,000 jobs, still about 50,000 less than what the normal sifting and winnowing is. So we pretty much have a picture of an economy that's not going anywhere, any place fast, but not necessarily tanking either.
Well, that's right. I mean, and we continue to see interest rates. Let's see what's the 30-year doing this morning. It's still up there about 5.14%. The 10-year is still well over 4.5 at 4.62. So, we continue to see interest rates increasing, and that's not good news for anybody.
Not in any way, manner, or form. Kind of on the butt end of earnings season, but there are still some companies that we've heard of before reporting, and NVIDIA isn't the only big monster that reported. Walmart, boy, they really sounded like stinking thinking on their guidance, didn't they?
They did, Dave. They did not have the best quarter in the world. They did beat on revenue by about, I don't know, let's just call it 3 billion, not quite 3 billion.
Pennies,
But
you know.
yeah, just pennies. Yeah. But earnings came in as expected at 66 cents a share. Um, but they talking about looking forward guidance, they're really kind of stinking there because they expected earnings to be about $2.91 a share. Walmart came back and lowered that expectation from like that to $2.75 to $2.85. So that's got them trading down this morning almost 3%.
Yowzers. And when a
Yeah,
company that big talks about 20 cents a share difference from expectation, we're talking about a running ton of money, aren't we?
we are based on the number of shares out there and stuff. So, hey, other little tidbit. Now, this isn't earnings, but evidently the Trump administration government plans to award $2 billion in grants for quantum computing companies. And so the likes of IBM is one of the benefactors there of that. And so their stock's actually trading up like 5% this morning.
I'm only halfway familiar with the concept of quantum computing, but my understanding is that basically what it does is it uses so many parallel processors that it kind of takes the digital out of digital computing. It's almost like analog compute. almost like analog computing, basically. It can make 87 different decisions at one time.
Yeah,
And it's
it's
supposed to be the future from what I've read.
yeah, yeah. So got a couple of other household names into it. You know, the parent of QuickBooks and
Mm-hmm.
TurboTax. They revenue for the quarter was below expectations, and so they also announced. Now, this is a big deal, Dave.
Mm-hmm.
17% reduction in the workforce.
Let me guess, they're going to try to substitute artificial intelligence for it.
Yeah, this little blurb I got doesn't really tell me that, but you gotta be thinking, and we delved into it some, so I think that's probably what's going to happen there. So that's got Intuit though trading down almost 16%.
And I know based on that, I'm going to avoid walking by Olivia's office when she's looking for user support for our copy of QuickBooks. She can throw things with a. She got a mean right hook, I'll tell you. Hasbro had an earnings beat, I understand, and their CEO says that people are prioritizing their kids, so he's actually feeling halfway good.
Good. That was not on my tidbit sheet. So that's good news. I'm sure Mattel's going to come out and it'll be the exact opposite, right?
They
Um,
always seem to be that way, yeah.
they do.
Other tidbits.
Tidbit on Kroger, and then I got a couple
Mm-hmm.
earnings still. Kroger down this morning as they've come out and said, we're going to fight. We're going to fight Walmart. We're going to fight Costco. We're going to cut our prices across all our stores. And we're taking them on. And so that's got them trading down about 4%. And then we've got John Deere, which is kind of a staple when it comes to agricultural equipment. They had a better than expected quarter on earnings, $6.55 versus 570. Revenue slightly above expectations, but they are trading down about 3%, even though they reaffirmed their full year guidance. So, not sure what's weighing heavy on them.
Weird.
Yeah. Uh,
Why do we got one more and then we can reset the table. See anything else?
so I got one more. I got Elf Beauty Supplies, and Elf came in. Oh, well, I lost them now, Dave. Oh, there they are. They had a good quarter on top and bottom line. Um, they were trading up as much as 7%. More now. They're up almost 9% now, Dave. Um, so that's good. It's planned to undo some of the tariff related price increases they had, so they're going to drop some of their pricing. So good for them. Doing good.
Well, take it. Take it happily. Resetting the table. It was party time yesterday on the major indexes. I'm looking at my delayed quotes. Not very happy with what I'm seeing. What are we looking at 45 minutes before the opening?
Yeah, it's not a good day this morning, at least. The Dow right now is down a third of a percent, $160. The S&P 500 is down 4/10, almost $30. NASDAQ 100 is down 6/10, that's $173. And the Russell 2000 is down almost 6/10 as well. On the other side, we've got red ink there too. Dave, silver's down another 3% this morning. Gold's down 1 1/3. The only thing up is what we don't want to be going up. Crude oil. Crude oil's up 2.8%, back over 100 at 101.03. And I think that's why the prices have dropped this morning, Dave, because when I first looked this morning, oil was back down to like 98. And so I had green indexes at 5:30, 6 o'clock this morning, but obviously oil went up and indexes went down.
That psychological barrier strikes again. Looking overseas, the Asian Rim was decidedly unhappy with our tech stock reports. Everything was in red ink. Mainland Chinese indexes were down by over 2% at the 6 a.m. close. Over in Europe, it's a decidedly mixed bag. I got a couple of indexes up, few more down than up, meaning the average European index is down by a little over 1/4% halfway through the European trading day. Get my retirement together. That takes a few minutes on the phone with you. How do I find you to get a plan to be able to retire someday?
Dave, give us a call at 863-382-0037, or they can go to our website at statlerfinancial.com. There's a button right there at the top that says click here to schedule your phone call. Go right there and then catch us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m., 95.3 FM. And this week at the end, towards the last segment of the show, we're going to talk about what the new number is that people think they need for retirement.
Is it going to scare me?
It might. It might, Dave.
Oh, okay. Catch you shortly, my friend. Thank you very much.
Talk to you later.
See you. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Hey, folks, I want to thank you for joining us. I plan to be here tomorrow, but I'm going to be outside. So it depends on how self-service is as to whether or not we make it work. Hopefully we do. Hopefully you'll join us. If not, listen to the show this weekend. Great show. And I will talk to you next week. Take care. Bye now.